Hey, my name's James Nicholson. I hope you guys are well. Now, we're in the UK, but the Americans, the Federal Reserve, the central bank in America, had their meeting this week and they talked about interest rates. Now, it's really interesting and really important that we understand that, because what will happen is the Federal Reserve are going to be the first one to drop interest rates. That's a foregone conclusion because the Bank of England follow the Fed. It's so obvious, it happens every time, and this is why we need to really pay attention to what's actually happening in America. So I'm going to talk about that in this video, how that impacts buy-to-let investors, how that impacts residential property owners as well. So make sure you watch this video, you might learn a thing or two. Now, before we jump into this video, as always, make sure you smash subscribe over there and hit the bell notification. Have a look around this video, you'll see how close I am to 20,000 subscribers. It's about 300 to 400 people away. It's really that close. So you can help me get there. Smashing subscribe, hitting the bell. And while you're here, smash like, tickle the like button. Do something to the like button. That really helps us with the YouTube algorithm. Every time you do that, more people watch the channel. And I really appreciate it. And you're helping our community together. So do that right now. So the Federal Reserve, they've had their meeting this week. I've watched the meeting. I've watched all the analysis and I've watched their press conference afterwards, and it's really interesting because it's very different to the UK side of things. The Bank of England, they are very tight-mouthed on what's going on, and it was interesting because a reporter actually said to the Bank of England in the press conference, why aren't you as transparent as the Americans? Why don't you tell us what you're expecting to do this year? They don't really do that. And the Americans are very different. They're quite out there and quite open with the fact that they are expecting to drop interest rates multiple times this year. Now, that's really positive news for the UK. Now, here's the thing. The UK market, our inflation is still above 3%. It needs to get to that 2% target. It's expected to tick up in the next data that we get. That's based off flights getting more expensive. And I said in a video yesterday that I've noticed that I'm looking for an Easter holiday with my girls at the moment, and flights are a lot more expensive than they were last year. And so that's going to tick our inflation up. American inflation is significantly lower. They are around less than 2% in the United States. And they're saying that they've been less than 2% for around 6 months, but they want the average, the year, to get less than 2%, which is what they're holding off for. But they're very clear in their language now in the US that they don't expect to have to raise interest rates again. And that's a big pivot. The Bank of England followed the next day with very similar language. They talked about it in the Bank of England meeting. They've removed in their statement the possibility of rising interest rates, which is really, really positive. Now, the Federal Reserve, they've looked at all the data and they're saying we will be dropping rates this year. We're still in restrictive territory. So what happens is their rate is similar to ours. They have it as, it's around 5.25. They have 5 to 5.25. I don't really understand why we have just 5.25. Now, what's happening is as their inflation drops, let's just say it's 2%, then there's a gap, isn't there? There's a gap there of 3.25%. Now, let's just say that last month their inflation was at 3%, for argument's sake. That gap then would only have been 2.25. The difference between the inflation number up here and, the interest rate up here and the inflation number here. So when the inflation was closer, the inflation number was closer to the interest rate, the restrictive power that puts on people is not as bad. But when inflation drops, and now it's at 2%, there's a bigger difference there. Let's just say inflation drops to 1%. That means the difference between their rate and the inflation is 4. So that means this is more painful than this, for example. So actually leaving rates higher at the moment with lower inflation is harming people more. And they did talk about that, and they said what needs to potentially happen, they didn't say this, but analysts have said this, is that the interest rate should go down and follow, and maybe leave it that it's as restrictive as maybe this sort of much. But as the inflation drops, you should be dropping the interest rate as well, which they haven't been doing. And what the fear is that they may have over tightened. And because it's such a lag between raising or dropping interest rates before people actually feel the negative side or the positive side of that, we're already effectively below 2% in America. We're going to get to 2% in the next month or so as well in the UK. They need to start looking at dropping rates a little bit faster. The Americans are questioned about, look, if inflation dropped or went to deflation, could you just crash the rates down? That is also something that might happen, and that's a possibility as well. A lot of this is based off the fact that the Americans have a fairly strong job market at the moment, as we do in the UK still, and that's giving them the flexibility to just wait and see. If unemployment increases in America or in the UK, I think the decision to drop rates is going to happen that little bit quicker. They're also talking about recessions on both sides of the pond now, where last month they were saying we potentially avoided that. Now it's a 50-50 chance that the UK is going to go into recession at least, and that's really, really difficult to see. Now, how did mortgage rates react to this stuff? Well, they want the swap market, where the banks actually borrow. They want more talk about dropping interest rates. All the markets expect interest rates to drop. They feel that interest rate drops, a lot of them could be in April, May this year. And so they expect that's what's going to happen. The fact that neither the Bank of England or the Federal Reserve verbally committed to what date the interest rates would drop. The Americans are saying they're going to drop. The Bank of England is saying at some point they will. What that meant is that swap rates are actually a little bit higher at the moment. So some good interest rate deals, mortgage rate deals that you got last week have been pulled from the market. Nationwide has been putting interest rates up, which is not great. What will happen is, as these central banks start to drop rates, you'll start seeing these good rates again. And in fact, the Bank of England were saying you could be better off taking a short-term interest rate at the moment. Maybe if you can find a 1-year deal or a 2-year deal, that could be the better deal. It was interesting to see that language come out of their mouth. They don't normally like to tell you what to do, but they're saying interest rates are going to move down, so maybe look at a shorter deal at the moment. A lot of people ask that question. There it is from the horse's mouth. So the Americans, they are saying interest rates are going to go down. It's more looking likely that it's going to happen sooner rather than later. Once that happens, the UK market will do the same. Comment below with your thoughts. Smash the like button. Do subscribe to the channel. Go and grab the fundamentals of property investing in the description. It's still less than £50. We're going to put that price up soon, so grab that while you're here. Do check out all the other content on my channel, including this video right here.